This is Seewing Yi, and today I'm going to share with you why the housing market was not as bad as everyone thought it was back in 2022, last year. All the naysayers, all the doom and gloom, all the negative headlines are paralyzed lots of people. Again, the news media, the mass media, the way they sell news is through clickbait. How clickbait occurs? By selling negative news sales. That's advertising. That's social media. That's how America works. That's how capitalism works. So I'm not dishing on the overall American culture and all that, but a lot of information that as a consumer you've been hearing there's a detriment to your financial wealth and financial health, because if people are led into believing all this negative information on housing market, the narrative is so negative that people are paralyzed with fear, and they do not take action to increase their personal wealth and financial freedom. I'm here to go over the data to dispel all the naysayers, all the doom and gloom. The housing market really are not that bad. I'm going to focus on 2022, last year, when we hear all crash videos, clickbait videos. They have bombarded their YouTube channels with all types of paralyzing news, and it's just very irritating to me. Especially as a consumer, you have to take back control of the narrative. You have to look at the right data. You have to study, find the right source, the right credible source for your information, so you could make informed decisions and to achieve your goals, whatever they are. With that in mind, I'm going to use the source. I'm going to prove it to you that why this past few years has not been as bad as people paint the picture it is. So, okay, I'm not an economist. No one could predict the future, but I'm not going to go over the recession fears or inflation situations and all the things going on out there with the job market and all the volatility, the mortgage rates and everything else. So you have to take a step back and just breathe in and analyze the true data and move forward. So I'm using the Redfin port here. I'm giving you as much accurate, informed data as possible. So you are not going to be misled by all those pundits out there, all those social media, all the YouTube channels and mass media and all the headlines. So I'm going to start off by using medium sale price. I'm using 2022. The black line is a barometer. Okay. See, I've heard, you guys all heard all the comments on YouTube videos, and consumers making comments, and YouTube watchers making comments for the past year, last year, especially 2022. Oh, people waiting for the crash, 30, 40, 50% drop in home prices. And we're going to revisit the 2008 financial crisis, real estate downturn again. So all those narrative did not come into fruition. It just did not happen. And this data clearly will show you why. All right. So let's dive in. The year 2022, the black line right here, the median price was around $346,000 nationwide. Again, this is a national data. I know real estate is very hyper local. Every market is very different, but I'm going to use the national real estate data just to give you a big picture, high level trends that has occurred between last year and the beginning of this year. So you can make an informed decision on your financial situation. All right. So the benchmark when we start out January 2022 was $346,000 median sales price of a typical home nationwide. Now, before I even do that, now during the pandemic real estate boom, because of a historic low interest rate, homes were skyrocketing in the past 2 or 3 years. As you can see right here, which is mind-boggling. On the year 2021, a couple of years ago, the median price of homes were only $300,000. and the homes was continue to skyrocket as a result of historical low mortgage rate, 2021. And the first 6 months of 2022, as you can see, start out with 345K. Then at the peak of 2022, June of 2022, the median price have skyrocketed 13% to $387,000. Now, bear in mind, at that time, the mortgage rates were around June 2022 were approximately in the mid fives, like 5.2, 5.3. Don't quote me on it. So that mortgage rate, we have still seen skyrocketing home prices the first half of 2022, to the tune of 13%. Again, nationwide, okay? Year to date, from January to June 19th, 2022, at the so-called peak of the housing price point last year, 2022. Now, keep that in mind, the mortgage rate were in the mid fives. Then you can recall the painful Federal Reserve, because they kept the low historical mortgage rate too long, and Jerome Powell used to blame. So as a result, inflation were an all-time high in the middle of last year. So the Federal Reserve have took a conscious, systematic effort to lower the inflation. As a result, they have done a lot of rate hikes throughout the second half of 2022 in particular. As a result, the mortgage rates has tumbled from June, July. Then you'll see the interest rate, the mortgage rate has increased to around 6.5% throughout third quarter of 2022, up as much as around 7.3% mortgage rate around October 2022. As a result, the demand of homes in the second half of 2022 have completely tumbled. And as a result, home prices started to tumble, single digit, in some market, double digit. Of course, the western region of the U.S., because of the boomtown rising, skyrocketing home prices in the first half of 2022 and throughout 2021, market regions such as Boise, Idaho, Austin, Texas, Phoenix, Arizona, Las Vegas, Nevada, and throughout California, for that matter, the homes fell at a tune of double-digit appreciation. So tumbling. People were panicking. YouTube channels start to talk about crashing and correction. A lot of very bad news. The war is coming to an end, all those kind of things. Don't buy homes, don't buy real estate. And so low demand and supplies are pretty moderate. So we've seen, now, even said that, the lot of areas of the U.S., like in the Midwest, in the South and Southeast, the housing market was pretty steady, believe it or not. But of course, the news media does not talk about that. News media always want to dwell on the negative, so they focus a lot on the housing markets that fell month over month in the second half of 2022. And that's how it is. Negative news sells. So anyway, to conclude this very important chart toward the end of the year, okay, in the middle, at the peak of last year, June 2022, the median price was $387,000, up 30% year over year from 2021. Right here, orange lines, 2021, skyrocketing home prices throughout the whole year, 20, 30, 40% appreciation, even more in some specific markets. So a lot of equities were gained as a result the past few years. Anyway, now we fast forward and the mortgage rate is still around high sixes and mid sixes as we conclude the year of 2022. And then, as you can see, the appreciation rate has risen year over year, December 2021 from December 2022, around 1% gain fell from the peak of 13%. So all the gain that has occurred the first half 2022 at 13% year over year from 2021 has evaporated at the end of the year, when the following 6 months of 2022, all the way down to the new price of $350K. Make sense? So really, it's a wash. So think about it. So have you seen a 30, 40, 50% drop in home prices in 2022? And the answer is no. In some market, like, yeah, maybe San Francisco Bay Area where I live for the past 30 years, I have experienced firsthand what's going on locally. Yeah, San Francisco, yes, the prices have gone down around 15 to 20%, depending on the zip code and neighborhood, and certain areas of California and LA, similar, and a few other places in California have dropped double digit in the second half of 2022. Understand, but other markets have done well, like Florida have done well, and few Northeast markets have done well, and generally the Midwest markets have been very stabilized throughout the past few years. As a matter of fact, they were not subject to the volatility of the housing market, unlike many of the boomtown western region of the U.S. Has indicated. So anyway, so really, if you think about it, either wash, right? 2022, we started at the median price of 346. We end up the median price of 350. This did not really move the needle, right? So all that people are freaking out, people are just paralyzed, all the massive information, every single day headlines stating crash days, house market crash, recession and inflation and job losses, all of that negative narrative that been put out into the mainstream media. It hurts so many people. Anyway, as I conclude this, we start out there. Not only the year 2022 is a cool wash, end quote. It's a wash. You know what I mean by wash? Because it's even out. Things have evened out. Okay. Skyrocketing home prices increased the first half of 2022, followed by single and or double digit price decreases for the remaining of the 2022. And then as we start the 2023, the blue line 2023, the benchmark is starting this. Then spring buying season is very strong on a seasonal basis. We expect a lot of homes to be coming into the market on a historical basis during April, especially, but we have not seen that. At the same time, the home sellers are not selling. They are sitting on a mortgage rate of most of them. Home sellers, they are sitting at a below 4% mortgage rate. So they are staying put. They're not going to move up. They're not going to be a part of the move up buyers. They sell their home. Why would they sell at 3% historical low mortgage rate to move up to 6.5% mortgage rate? So as a result of the lack of inventory, historical low, as we speak, and pent up demand, a lot of people, I know there's a 40-year home affordability loan, and a lot of people are priced out of the market, especially first time home buyers, but you still have enough demand to gobble up that extremely limited supply of inventory. And this chart right here, starting from February, a few months ago, February 6th, at the median price of 343 nationwide, it has all the way increased to around 6 to 7% month over month appreciation. And the new median price at April the 30th is around 369,000. So 349 median price starting January 2023. Now, 4 and 5 months later, the home prices has increased to 349 to 369, around 6 to 7% appreciation so far this year. So the uptrend is very interesting. So as you can see, the home price increases, the pattern of this trend is similar to the skyrocketing of home that has occurred the first half of 2022. So you see the parallel lines right here. So who knows, right? If the low inventory still continue to persist, and the mortgage rate is around mid 6% in the next few months, or even lower, then it would put upward pressure on home prices. See, if I watch 2022, prices start to increase in 2023, and that's couple more metrics I want to share with you. Months of supply. Economics 101. Have they not taught you in 6th grade? Economics 101. When demand exceeds supply, that this means is put upward pressures on homes. And many of the markets, year to date, we have seen, especially the lower end, the entry level homes, the homes that are below the median price in in a particular real estate market, we have seen anywhere from 3 to 5 offers per house. We have seen 5 to 10% home prices are a bit above this price, above asking. So home prices are very robust. There's a lot of positive activities and multiple offers and bidding wars. Nothing, the multiple offers and bidding war that we have seen so far year to date, is nothing that's gonna compared to 2021, where, we have seen massive amount of offers and triple digit appreciation back in 2021. And we're not, of course, we're not seeing that. Still, the trends are very interesting to follow. All right. And in fact, let's look at the week supply. Was the economics 101, right? Let's go back to school for most of you. So right now, as of April 30th, 2023, the weekly supply nationwide is 10.9. So just do the math. That this means is around 2.9% supply of inventory available. This is almost a historical rate, because what is historical rate of supply of homes? That was back in 2022 and 2021, which is on 2021 at the most magical year in history. In 2021, the month of supply is 2 months. And in 2022, down here, the black line, the months of supply is less than 2 months. We're heading towards, you see the trends of decreasing inventory and we're seeing a little bit less than 3 months supply inventory. That's nationwide. Some markets, like, believe it or not, in San Francisco, where I live, the supply of inventory these past 2 weeks is like 1.5 months. This is insane, right? Here's the thing. New listings is really not really trending that high. It's down 23% from year over year from April of last year, 2022. Active listings is down 30% year over year. Let's look at pending sales. Again, pending sales is almost 17% below last year today. This is very troubling. Okay. And then active listings. Look at on this hot spring buying season, on every year, we should see active listings going skyrocketing, like, on a historical basis. This is mind-boggling. The active listings is trending down ever since the beginning of the year. This is mind-boggling. At the beginning of the year, we have 793,000 homes actively listing throughout nationwide. And now fast forward to April 30th, we only have 712,000 active listings, which is mind-boggling. It's trending downward. All these metrics, it tells that things are getting very weird. And let me do one more thing. Median days on market. See, median days on market is down, is 33 days, which is so homes are selling pretty quick. 1/3 of the homes are sold or under contract within 2 weeks. That's how robust the housing market is. At the end of the day, so what's the takeaway? The takeaway of this video is that all this crash is behind us. You're not going to see that because, once again, economics 101, when demand is greater than supply and there's a scarcity. Whenever there's a scarcity, there's a more demand for it. When there's a more demand for it, the positive trends is going to happen. That's what happened so far, and that's what we're seeing. So the takeaway is, the last year, 2022, there was no crash. There was just a very slight correction. The home prices we did not even lose any values nationwide. This is mind-boggling. This data, people need to understand what actually went on based on this data and that I just produced for you. So this is conclusive. This is undeniable. This information. So the housing market is very, very resilient. It's very strong, and people need a place to live. There's a shortage of homes moving forward. This is still a seller's market, technically speaking, and things will continue to rise. There's always bad things that could happen that could affect the housing market negatively. The job market, if it tumbles, if the unemployment rate suddenly skyrockets, or whatever, or there's some political situation, world economic situation that we did not foresee that could affect our economy, whatever, the doom and gloom scenario. Absent those unforeseen scenarios because again, low supply of homes, historically low, and pent up demand. And so we're seeing 2023 will be a very interesting year. So that's all I have to say. If you see a lot of value from this video, please smash the like button and also subscribe to my YouTube channel. And also, the third thing I want to ask you to do is quickly visit my website below and drop your email into the form to subscribe to my weekly turnkey real estate investor newsletter. And once you join our free network, you will receive weekly market updates, investment opportunities, real estate education, and interviews with top industry leaders straight into your inbox that you just won't find anywhere else. Okay, so thank you so much. This is Seewing. Thanks for listening. Have a nice day. I'll see you on the next video very soon. Bye-bye.